All right, what an amazing CPI number we got this morning, and the markets absolutely went berserk. It was like a nuclear bomb, man. It just blew the stocks higher. The SPY has really climbed. I'm going to dive into the SPY as well, but here's what happened with the CPI numbers. They basically came in great. They came in better than expectations. We were expecting a 3.3 year over year CPI read, and we got a 3.2, so that came in way better than expected. And we were expecting a core CPI of 4.1, and that came in at 4. The markets loved it. And in a way, I was reflecting on the fact that obviously, when I think about these markets and how quickly they turned around and how fast they went up this first week of November, you have to know that there's a lot of people that already knew that that CPI was going to come in the way that it did. And here's what I want you guys to take from that, or here's what I want you guys to think about for just a moment, is that they knew this was going to come in. So they had bought the rumor or bought the insider information, and now that it's here, they may be selling into this momentum. May or may not, because the fact is that the markets still have room to go higher because we're not sitting at all-time highs. Now, we're sitting near the high of this move, so we may get some consolidation, but I would not be trying to guess the turnaround or try to catch the top to go short of this market just yet, because I don't know that we have found that out. It's clear to me that there was a lot of people that knew that this CPI was going to be coming in good and that they bought at those lows and are now really enjoying this massive run up. But it's not clear to me that we are done going up, and it's not clear to me that we're ready for a reversal. You guys know that I follow Apple quite a bit to get a good sense of the overall sentiment, and Apple's pushing up against that best case scenario resistance that I had called out over the last couple weeks. I said, guys, we are very likely, if we get above this particular number, we're very likely to get to 188 and 189. Seems to me that we are days away from hitting that number, and I don't think that we're just going to stop where we're at and go lower. We may pull back slightly, but I think we're still going to hit the top of the range for a lot of our favorite stocks. For a lot of big tech stocks are hitting the top of their range right now, and we are going to see some consolidation, but it's very possible that we're going to still get that Santa rally. Now, there is one threat to all of this that could absolutely turn these markets around and smack them down. And I'm going to outline that threat to you guys today because it absolutely would be bad. And it's a news event that can absolutely push these markets down unexpectedly, right at the fever pitch of momentum to the upside. We could get this thing to turn around, and I'm going to break that down for you guys today. I'm going to go into the SPY. I'm going to give you guys resistance above. I'm going to briefly talk about Tesla. I'm going to briefly talk about Target and some of the other data points that we got out today here in just a minute. This is the Stocks with Josh show. Thank you guys for joining me today. I want to give you guys a quick heads up. I'm going to be traveling. I'm catching a plane early tomorrow morning. I'm heading out to Delaware. I'm actually going to spend a little time with Stockmo, and I'm going to do a couple shows with him. So you might see us together over the course of the next couple days. Then I'm swinging over to Maryland, where I'm going to spend some time with my big family for Thanksgiving. All my kids are flying in. My daughters from Hawaii with their husbands, and me and my wife and my son are heading out to Maryland. So I hope that you guys are moving towards your Thanksgiving plans, whatever they may be. I hope you get a couple days off, and I hope you get some rest. If you need help trading these choppy markets, don't neglect that subscribe button. Okay, so what's the big problem? What is the big news event that could absolutely turn around these markets and push it back down? Well, it's the government again. They simply kicked the can of a government shutdown down the road, and here we are. Time's running out. It now has to be dealt with again. Guys, they could have got this solved and really dealt with it, but instead they just shoved it a little bit further down the road, and now it's popped back up, and we have a big problem because Moody, which is one of the credit rating agencies, has sent out a shot above the head of the economy and every U.S. citizen and said, guys, you're in trouble. If this thing doesn't go away quickly, we're going to downgrade you. And so that's the news event that we're up against that can totally change this bullish narrative. Let me quickly read this news story to you guys. U.S. latest Risk of shutdown threatens rating downgrade. Now, the government has been working overtime to try to avoid this, and there is a deal on the table right now that can go forward, that, to be honest with you, the political parties should be able to agree upon, because here's the main thing that all the politicians want to agree on. They don't want to agree on any budget cuts. And in the current deal, both the Republicans and the Democrats have both have it before them today that they can continue to do business without cutting a single dollar. So I don't really know why they wouldn't agree to it. It seems like a good deal for both parties. But if for some reason they do not agree, this is what Moody's has said. They've specifically said that due to wider budget deficits, that's overspending, and political polarization, that's politicians not being able to get along, they're saying they will downgrade us from a AAA to a AA, and they're the last AAA rating that the U.S. holds. And so this is a big problem if all of the rating agencies downgrade us in 2023. It definitely is a warning of things ahead. And so, yes, can the market go higher in this environment? Yes, it can. But make no mistake about it, if they want to pull the rug on this up move because of this bad news, the market makers can use it as an opportunity to take profit and to drive fear back into the hearts of all the retail people who are now FOMOing in, who didn't buy Tesla when they could have, when it was just below $200. And I was on my page saying, guys, I just bought long-term retirement. The next day I came out, guys, I just bought long-term retirement. This will be $250 before the end of 2023. Those folks who had loaded up with me then, that was the smart money, will, when this thing runs up now to 241, which is where I think it's going here in the next couple of days, and possibly even higher, even as high as 251, it's this news story that could turn right around and slap the price back down. So just make sure you're aware of it. I know if you're following me, that's, you know I'm going to make you guys aware of these things. I also wanted to share a comment from Yellen in regards to the news of Moody's downgrade. Now, Janet Yellen, she basically comes out and responds to these events and attempts to set the tone for the country. And she came out and said, I don't agree with you, Moody. I think you guys are seeing it wrong. Her exact quote was, the American economy is fundamentally strong, and Treasury securities remain the world's preeminent safe and liquid asset. I actually agree that the American economy is strong, and I actually agree that even though we have way more debt than we should, it's probably safer than the debt in many other countries. Me and my buddy Larry Jones talk about doing the Running with the Bulls sometime in 2024 in Spain. And he always jokes with me, says, I don't have to be the fastest runner. I just have to be able to outrun this guy, referring to me. So, I'm going to make a point on his joke, which is America does not have to be the fastest runner. It doesn't have to be the fastest sprinter. It just has to be faster than Germany and Canada and China and India. And the fact is, it continues to be so. And so I agree with Janet Yellen that the economy is not looking weak right now. And that's actually what has caused the Fed so much fear. It's why he's driven up interest rates as fast as he has. But right now, those interest rates seem to be working and the inflation seems to be cooling. And today we're going to take a look at the heat map and see what has been going on with this big news. What we see is a sea of green. Absolutely beautiful. I know that there's been a ton of money made. Another outlier today that I wanted to share with you guys was Home Depot. Now, Home Depot was still down 31% from its December 2021 high of $420. Now, I wanted you guys to see that this thing has been compressing sideways for a long time. It's in a very tight price range. It's actually been compressing sideways for the last 3 years. And so there's the opportunity for a breakout in this stock. Now, support is $279 and resistance is $300. And you're like, okay, Josh, but we missed the Home Depot move. Why should we be bullish about this? Well, I'm going to tell you why I'm bullish about this news and the move that I saw on Home Depot and why I was tracking it is because I think it's going to give us a little bit of a clue about how some of the other retailers are going to do this week. And the one that I'm bullish on right now is Target. Now, I'm in Target. I did a technical update for Target for the Discord, and I'm going to break down Target for you guys real quick because their earnings are Wednesday pre-market, and I want you guys to see what I see in the charts. First thing I see for Target is strong bullish divergence on the daily time frame. for the RSI. It's also made a series of higher lows. I also see that it's operating off of an extreme oversold signal that we got in October, which means that there's room to the upside. Now, for the Discord, I provided them a chart and I told them that this thing was trading in a price consolidation pattern between 107 on the downside and 113 on the top side. And if you understand the way that these consolidation patterns work, ultimately they're going to break out of that pattern and they're either going to break to the upside or to the downside. Now, I actually see that the break to the downside has less potential strength than the break to the upside. If we get up above $113 and these earnings are good, this can absolutely do exactly the way we just saw Home Depot do, and it can shoot up to 120 and even as high as getting back to $125 per share. And yet the risk to the downside largely appears to me to be a move from 113 down to 104. I am in this going long into earnings, small position size. It's not a major move for me, but I am giving it the benefit of the doubt, especially after we saw what happened with the CPI as well as Home Depot's earnings. So I'm long and I'm bullish on Target right now. I'm going to give you guys quick technicals on the SPY, Tesla, and Apple, as well as a brief commentary in the market. Before I do, if you need better trade tools, I want you guys to check out two apps that are offering free stock, and I've got a link to both of them for you guys in the top pinned comment of this video. You can get free stock from Moomoo. They're offering up to 16 free shares, and you can get free stock from Webull. Both of these are zero cost to trade platforms that are giving away free stock for early sign up. Get yourself set up going into 2024 to have better trading tools. Check out the offer from both of them. And if you're wondering about the technicals that I'm providing when I'm not doing a video, I provide those over on the Discord. Now, this is a Patreon with the Stock Squad, Stock Mo, Keenan Grace, Stock Up with Larry Jones, and myself. All four of us are providing technicals in that Patreon, which is available through the Discord. There's a link in the top pinned comment for that. Come check it out and join to get more content from all four of us each and every day. All right, so let's talk about the SPY. Let's talk about what's going on. Let's talk about the trend. Guys, the number one reason why most retail traders fail in a trade is that they're going against the trend. So what is the trend right now? Well, the trend is clearly bullish. There has been no reversal. And even though we have had a gap up, the fact is we're still moving up in a bullish trend. And I just want to take a minute and show you guys the SPY chart. The fact is we are currently just under 10% up just in the last 2 weeks. Now, you knew that we were trading in a channel. We came down between 10 and 12% and we were knocking on the bottom of that channel. It turned out to be support. The markets have fired up. The question is, where is the top? Well, there's actually quite a bit of room between where we're at and the very top of this channel, but we do have to expect some pullbacks. I'm going to assume that this is going to continue to climb, but I wanted to give you guys a marker that I'll be watching for, that if we do hit, I think that we absolutely have to pull back from, and that's the $453 mark on the SPY. I think that that's strong resistance, and then after that, 456 is even stronger resistance, and it's hard for me to believe that we could go much past those two numbers without having some sort of a correction on the SPY. I wanted you guys to have those on your charts because those are the lines that are drawn on my chart. I will also update this chart to the Discord later today. Now let's just dive into some Tesla. Now Tesla is my bread and butter. Tesla gives me the payday. I trade Tesla in such a way that I almost feel like I'm punching the clock when I start my morning off to go get some of that Tesla money. Now, Tesla had an incredible run up today, guys. When Tesla was below $200, I came out each and every day and I said, guys, I bought Tesla today for my long-term retirement account. This is going to be a $250 stock before the end of this year. Now, we are up at 234. It's been an incredible climb. I think the next area of resistance is 241. We got to see how Tesla does with that. But if Tesla consolidates under 241 and above 231, then for me, that's a pretty strong confirmation that we will hit that 250 number. We are getting very, very close to it. And at that point, you might ask me, well, Josh, are you going to sell Tesla? No, I'm not selling any Tesla. I'm not selling any Tesla in my long-term account, but I'm going to continue to day trade it up to those levels, and I will be thrilled to day trade it down because I'm going to make money on Tesla day to day, whether it's moving up or down, because I'm following the charts. If you guys want to follow that journey, you know, if you're in the Discord already, you guys know that I'm constantly providing guidance on Tesla. Now, I will leave you guys with one other bullish indicator for Tesla today, is that it went up today 10% on 60% increase in volume. So this was an up move in price with an up move in momentum. That's called confluence. More opportunity to the upside on Tesla. But no, this is not the spot to be loading up for long-term investment, depending on how long you want to go. Because if you load up here and you didn't load up at 200, first you have to ask yourself, what are you doing, right? Why are you doing that? Why are you buying it after it's gone up in value? The whole goal of this thing is to buy low and sell high. All right, we're not going to dwell there, but let's just quickly get into Apple. In Apple stock right now is doing what I have predicted over the last couple of weeks. We're watching it all unfold just as I shared the opportunity with you guys at the beginning of last week. That's what we're seeing in Apple now. Now, where is Apple's support? Apple has support at $184. Apple has strong resistance at 188 and 189. Does it mean that it'll stop there? No, but it likely will get caught up there. And so just keep that 188 on your Apple chart, because as we push up to it, if you're in a swing trade, it's going to get way more choppy at 188 because we are definitely at the top of the range, because again, this thing has been screaming up. This was just $164 2 to 3 weeks ago. And so the fact that we're up at 188, that's an incredible run up, and it's going to begin to get choppy. But guys, the trend is still going up, so don't get too bearish on Apple just yet. Give it a little bit more time to breathe to the upside. Remember, we want to hold our winners longer. All right, I've got long-term Apple, not selling. Just going to do covered, just going to sell covered calls, not going to sell my Apple, but I know when to buy it. And I bought it when it was beneath $170, and I told you guys that I was buying it then as well. Guys, I hope that this benefits you. I hope that my trades are not meant for you to follow, but they're meant to give you some confluence of somebody else's perspective who's been in the market for a little bit of time. All right, guys, that wraps it up for me today. My final conclusion is stick with the trend. Be aware of the threat of the government shutdown and how the market makers can turn that story around and reintroduce fear back into the market. Keep your eye on the VIX, because even though it's cooled off and it's down on its lows, it's at a place where a reversal on the VIX could be expected. And so what you'll see is you'll see those news stories come out. You might see Moody downgrade the market, and at that point, you're going to see the VIX spike, and you're going to see some pullback. Even with all these technicals, I wanted to cover one last topic. The topic is, did I get all my trades right, having gotten these technicals right? The answer is no. Even though all of my charting has proven to be solid in my eyes, it did not translate in me making the most money that I could have following my own guidance, because it's one thing to chart these stocks, it's another to take a position of risk and to get the timing right. So don't beat yourself up. I just want to remind you guys of what I say, because I have seen it for the last 20 years to be 100% true. And that's, if you missed a train heading to Wall Street that you thought was going to be a big payday, and you're seeing everybody else post that they're up 100%, 200%, 300% on a stock, don't even slightly worry about it. Take this moment to just dive in, do some research, start looking at the charts again. There literally is going to be another opportunity around the corner to buy your favorite stocks, to buy Apple, buy Tesla at better prices than they are today. Don't let the FOMO get to you. Understand the way Wall Street works. It always presents a new opportunity. I hope this was helpful to you guys. Hit that like if it was. Hit the subscribe to follow along to get more predictions from this channel. As always, peace and blessings. Talk to you guys soon.